Okay, Assalamualaikum warahmatullahi taala wabarakatuh and good morning. Today I'm going to explain to you on group statement of cash flow. For example, two, whereby what happened if the group actually purchase or acquire a subsidiary during the year. Okay, so this is what from I extracted from example 2 of your textbook Jen Laza. Okay, so normally, as usual, I classify in the statement of financial position into types, okay, of item. For instance, non-current asset, investing activity, current asset, operating activity, equity, and non-current liability as financing activity, and also current liability similar as current asset, they are working capitals. Okay, so after I classify it, I actually calculate the movement. And I think you have already understand the movement. Okay, we look at one example. For instance, there are increase in property plant equipment, which means that purchase of property plant equipment, that means cash out, and vice versa. In this case, all the assets are increasing, so that's why all negative or increasing. Similarly, for equity and non-current liability, the movement is also in an increased position. Okay, however, the movement, for instance, the increase in ordinary share capital reflect new share capital is introduced to the business, so it means that you get more money. So that's why in terms of money it is cash in. And if you look at debenture, it's like term loan also increase, it means that you get more loan, so you get more money. So you can do that for every item, and then if you total everything, you will get the movement as zero. Okay, so it means that the movement, if you add up everything, you get zero, it means that your movement is already right. Okay, hopefully. And then I'll go on to analyze the statement of profit and loss for any non-cash item, and then from this I found out share of profit of associate. It actually non-cash item because, as we discussed before, it doesn't reflect cash. Okay, so because it doesn't reflect cash, share of profits, when you calculate it, if you still remember, does not reflect cash receive. Cash receive is only reflect by dividend, dividend yang syarikat terima. So this is not dividend, only sharing of profit. So this is actually non-cash item. But if a parent receive dividend, that is actually effect cash. Okay. So and then I go on to trying to classify the trying to classify information, additional information. Okay, dividend paid is financing activities, because it relates movement in equity. And B, it actually amount of goodwill, gain or loss, depreciation are all non-cash item, so we need to adjust. And then there are purchase acquisition of subsidiary. Yang ni yang membezakan apa yang biasanya membezakan cash flow simple dengan group cash flow. Dia ada purchase of subsidiary. Okay, so and then nanti saya akan explain adjustment. So when H purchase subsidiary by issuing ordinary share and cash, they actually receive, so this is what they have, daripada this is what owned by the fair value of the subsidiary lah. So dia akan dapat ni. Okay. We'll look at it later. And then H acquired a 20% interest in associate company investing activity. And also property, plant equipment disposal, also investing activity. As if you remember, investing activity for disposal, we will be divided into two: one non-cash item under operating activities, and also the actual amount received, which is under investing activities.